Yeah, good day everyone. My name is Oyedeji Eso from Qodelhar Forex Trading Academy. So today we are going to talk about we want to introduce ourselves to a new topic entirely. A new topic entirely. We have been talking about businesses. If you check our previous video, I've been talking about businesses, how to scale up with your businesses, how to write proposal, how to write business plan. But today we are moving into another topic. Let's go there. We are going into another topic. We are going into financial markets. As we all know, forex market belongs to a general name, financial markets. What is financial markets? A financial market is a place where individual, company and government buy and sell financial assets such as stocks, bonds, currencies and commodities. Prices in this market are determined by supply and demand. So how do they determine the price in financial market? It is being determined by what is being supplied to the market and what is being demanded from the market. So with that, I think financial market is a fighter to our economy because they facilitate the exchange of funds between those who have capital, that is the investor, and the savers, and those who need capital, the business people, the government and the individual. So that is financial market for us. So how can we now know where we are going in financial market? It is being sectioned into different type of market. Financial market is being sectioned into different type of market. We have capital market, we have money market, we have derivative market, we have foreign exchange market, which is the one we are talking about here. We have commodity market. So in all those things, it is our opinion to follow the one we want to discuss on. So what is forex market? What is forex? Let's stand by that. Forex means foreign exchange. It is the global marketplace where currencies are traded. So the forex market is decentralized, as we all know. Forex market is a decentralized market. No government, no anybody, no one is controlling forex market. It is operate over the counter, meaning trading happen directly between parties, usually through brokers or banks. So nobody, people, businesses, government exchange currencies for various reasons, such as tourism, trade or investment. Traders take advantage of price movement between currencies pair and make a profit. So that is forex market. That is forex for you. It is the exchange of currencies between parties. When a business person is traveling from a particular, let's say from South Africa or from Ghana or from Nigeria, you are going to US to transact. Before you leave, you must have the currency of the country you want to go and do business with. You must have exchanged the currencies with them. So, and as it is, foreign exchange, forex market can never be controlled by anybody. No central bank of any country can control forex market. So with that, it is a market that has no decision of any country government. So by that, we have to take serious of what foreign exchange is, that it has no control of anybody. It is a market that is being doing over the counter. So let's go by the history of forex market. So in 1944, Bretton Woods Agreement came up. So Bretton Woods Agreement it was established that a fixed exchange rate had to be created for country currencies. So, and countries they were abiding by it. Not until 1971 that this agreement collapsed. The agreement got collapsed in 1971, and it was stopped. It was stopped in that 1971. So after 1971, currencies began to float against each other. It started floating against each other, so leading to modern forex market. So in 1990s till today, there was a rise of there was an involvement of internet. So it was the involvement of this internet that brings about this forex trading, electronic forex trading, by individuals, by retail traders, by banks. So it's now carrying involvement of every other person in the market. So in that light, we have to, we have to understand the history of what we want to be doing. We have to understand the history of what we want to be doing. So, and as we all know, we said forex market is a decentralized market. So it is operates in four major sections. So when we get to that section, we are going to explain that. So forex market is a market that's been decentralized, as I said before. So what now makes this forex market being a sweetest market is that it involves the uses of internet between the parties. Now there are major players that make it to be sweet, to make it to be sweetest. There are major players. Who are these major players? We have banks. Banks are there. Banks is one of the major players. And when we are talking about banks, we have different banks that are involved in forex trading. We have Morgan Stanley, we have Goldman Sachs, then we have Credit Suisse, we have HSBC, you have JP Morgan, you have RSBC. Different companies and banks are involved. We have Barclays Banks, we have UBS, then Deutsche Bank. Different big banks are involved. Even our commercial bank in different countries are also involved. So industries, hedge funds, what's it called, the financial institutions, they are all players in financial market, in forex market. So then, before we now go to brokers, we have a lot of brokers in the world. We have Exness, we have Ion FX, we have FX Pro, we have HFX. So different banks are involved in forex trading. So different brokers are involved rather in forex market. So having done that, it means if banks are there, brokers are there, it is not sweet enough. It has never been sweet with the absence of retail traders. So it was the existence of internet that makes me and you as a retail trader to be participating in forex market. So the major players of forex market are banks, institutions, brokers, and retail traders. So with this set of people, it makes forex market to be very sweet. So corporations are also there. So brokers is just like an intermediary between retail trader and the interbank market. So they provide, and it is this broker that provides platform like MetaTrader 5 and MetaTrader 4. So they gave us the edge to be part of the market. So who are these retail traders? So individual traders like me who speculate on price movement. They make profits from movement of the price, and they have access to the price, to the market, through brokers using small amount of capital. And it is this brokers that gives the retail trader like me and you leverage, because the financial market, the forex market, is so big, so cumbersome to the extent that it's not amount that individual can have that can make you to enter the market. So it is these brokers that give us the opportunity to enter the market. So it is an opportunity. So major players, as I said, they include the central bank, the commercial banks, the financial institutions, so the corporations, brokers, retailers. So those are the major player, major participants in the market. So the next topic is currency pair. currency pair by currency pair, we have different type of currency pair. We have three type of currency pair. What are these types? We have major currency pair, we have minor currency pair, then we have exotic currency pair. So major currency pairs are pairs that are currency pairs that are being paired with United States dollar. Pairing of United States dollar with other currencies of developed countries. What are developed countries? What are these developed countries? We have developed countries like US itself, the Great Britain itself, the Japan itself. Then we have all the industry, all the countries that are developed already. Pairing of US dollar with this currency, with this country's currency, then we say we have major currency. So with this, I think example of this major currency is Euro USD. Euro is from the Europe, and almost all the countries from the Europe are developed country. So when you pair US dollar with USD, then we say we have major currency. Another major currency that we also have is GBP USD. That is Great Britain pounds with US dollar. So when you pair pounds and US dollar together, we have a major pair. Any pair that you have US dollar involved, pairing with developed countries dollar, developed country currency, then we say we have major currencies. Then also we have USD JPY. When we pair United States dollar with Japanese yen, then we say we have major currency. There are a lot of currencies like that are major currencies. Think of any developed country. Think of any country that are developed already, pairing their currencies with United States dollar. So then we say we have major currencies. Then the second one is minor currency. How do we know that a currency is minor? A pair is a minor currency, is a minor pair. When we do not have US dollar pairing with those currencies, then we say a currency is minor currency. The major currencies, they are the most liquid currencies in the world, because the price move very fast. People patronize them. People deal with them of almost every second. People deal with them, so it makes them to be liquid. So but the minor currencies is fairly liquid. So it doesn't involve pairing of US dollar. It only involve pairing of two developed country currency together. Do your assignment very well on that. Pairing of two developed currencies together, like when you pair euro from Europe with pounds. That is, Europe is a developed continent. Great Britain is a developed country. So we now pair their currencies together. Say we have euro and GBP. So from there, we come out with euro GBP pair. Then we have Australia GBP, Australia JPY. So Australia is a developed country, Japan is a developed country. Then you combine their currencies together. Then we have Australia GPY. So Australia dollar, then Japanese yen, AUD slash GPY. Then we also have GBP JPY. That's another currency from Great Britain, another pairs from Great Britain and Japanese yen. So when we have all this, we have uh, minor minor currency pairs. So with this, I think that is that on currency pair, on that minor currency pair. Then we move to exotic. Exotic are currency that they involve one major currency and one currency from a developing country. What are those major currencies? We have GBP, we have JPY, we have AUD, we have CAD, Canadian dollar, we have what else? We have euro. So when you now pair those currencies from major pairs with a developing country currency like TRY, that is Turkish lira, or NGN, that is Nigerian naira, or ZAR, that is South African rand. When you pair a developing country pair with a developed or a major currency pair together, then we say we have what? We have exotic pair, exotic currency pair. Then to save our time, because I don't want this video to enter 20 minutes, but let's quickly rush this. We have how do we make profit from this market? So there are three key concepts that we need to talk about that give us profit. So when we have what is called pips. It simply means pips in point. I mean percentage in point. Percentage in point means pips. So it is the movement of price. When a price move 1 pips, it give us 10 digits. I mean 10 whole number, that is 2 digits of 10, 10 digits. It means we have 10 points. That is 10 points. So when a price move, then we have 10 points with a pips. So with that, that's a good good way to go about it. We have pips. So that pips give us, it is the smallest unit of price movement in the forex. So smallest unit of price movement in the forex, in the forex market. So it's usually the fourth decimal places, like 0.0001 in most pairs. So in these pips, so we have there is also what we call pipex. That is when we have one pips is equal to 10 points. Then 1 point, 10 point is equal to 100 pipettes. So that's just a simple. When we get to the practical, then we understand that. When we get to the practical, we understand that. So just have to understand and get it clear. Then we have lot size. So we have, and when we are talking about lot size, it's just like a measurement of how we enter market. How do we enter market? Which measurement do we take to enter market? How do we trade in that market? Then we say we have lot size, and there are three type of lot size. We have even four. We have, let's say we have four. We have standard lot size, which starts from, which is 100,000 unit of the base currency. 100,000 unit of the base currency. So it means that when a currency move one pips, then it give us $10 per pips, and it start from one to infinity. So one lot size start from one to, standard lot size start from one to infinity. Then mini lot size start from 0.1 to 0.99. 0.1 to 0.19. So one movement of pip give us $1. Then micro lot size starts from 0.01 to 0.09, and one movement of pip give us $0.1. So with that, I think we should be able to do something about our how we make profit. Then the last one is leverage. Leverage is being given by the broker. So it allows you to control a large position with a small amount of capitals of yours. So example, when a broker give us 100 leverage, then you can control 100,000 with $100. 10,000 with $100. That is 100 leverage. That is 100 leverage times $100 that you have. It give you $10,000 leverage. So leverage amplify both profit and loss of yours. You should have that in mind. So if you are going to practice how we make profit, so if you trade one lot size on Euro USD and make 50 pips, so that means you trade 50 pips on Euro USD, and you choose your lot size is one standard lot. So your total profit will now be 50 times $10. 50 times $10, because when you must there is a standard of $10 that to give you $500, or you use this formula 10 LP. 10 is a constant number. LP, that's the lot size. What's the lot? We say we have one standard lot size. Then what's the pip? The pip is 50 pips. When you multiply 10 with lot, which is 1, times pips movement, that's 50. It gives us $500. So with this, I think we have done justice to this topic. So with this, we should be able to understand. Let's take our biro, write some things from the recording, from the voice, write it down. Get yourself, when you write it down by yourself, then you have a better understanding of what you have learned. So I think we are going to close this class with that. So please help us to like this page, subscribe to this page, share this page, comment on this page, so that we can, so that the platform can share the education to other people that need it. Thank you very much. Thank you for your time. My name is Oyedeji Eso from Qodelhar Forex Academy. Thank you.